Today I wanted to speak to you about George Soros, a Hungarian-born American business magnate, investor, philanthropist, and who's known as the man who broke the Bank of England. Now, if you focus on this sentence, a man who broke the Bank of England. Now, what is the Bank of England? It's not just any bank, it's the Central Bank of England.
The government raises interest rates twice in one day to 15% in its all-out battle to prop up sterling. But after a frantic day's trading, the pound plunges again.
We all need to wake up to who George Soros is and how big his organization is.
My understanding is that you went out with this protector of yours who swore that you were his adopted godson.
Yes.
Went out, in fact, and helped in the confiscation of property from the Jews.
That's right.
And we are talking about a battle happening between one individual, George Soros, and the Bank of England. And in the ultimate analysis, the winner was
George
Soros. But before I get into the story, I need to give you a little background. You know, when the EU was formed, the European Union, what was the objective? These European countries were always envious of the USA in the sense that you move from one state of US to another, the currency is the same, everything remains the same. But in Europe, small countries, while driving, you don't even realize when you get out of one and enter another. But language would change, currencies would change, and the currency values would fluctuate. If one European country buys raw materials from another and you have to make payment, let's say 60 days later, and 60 days later the currency value may have fluctuated, it's pretty unsettling. So they always wanted to have a United States of Europe, so to say. But it was a tremendous task. Before the EU was formed, several attempts were made to kind of control the currencies. One of the things they had entered into was known as ERM, Exchange Rate Mechanism. For example, Great Britain had entered into a deal with Germany that £1 will be 2.95 Deutschmarks plus minus 6%. Now, what you need to understand is how can a government guarantee that this will be the conversion rate? Because currency values fluctuate depending on demand and supply. If everyone wants to buy the pound will become expensive. And if everyone wants to buy the Deutschmark, then pound will become weak and Deutschmark will become expensive. So how can the government guarantee that £1 will be equal to so much of Deutschmarks? So folks, here is where the treasury comes in, the treasury wing of the central bank. For example, if everybody is buying the pounds and the pound is becoming stronger, the treasury from its own reserves will start selling. And if everybody is selling the pound, then treasury will use its resources to buy, and so that it becomes stronger again. Now, with this background, let me tell you what George Soros did. This drama started on 16 September 1992. There was a lot of activity going on in the Treasury Department of Bank of England. The traders at the Bank of England were fighting a battle, so to say, and they were losing. What battle were they fighting? They were buying pounds at furious speeds. Early morning they bought 300 million. A little later they bought another 300 million. In fact, by 9 a.m. they had picked up 3 billion pounds. Now, what should happen if you're buying so many pounds? The pound value should be going up. But the pound was not going up. Now, why will that happen? Because if the traders were buying, obviously somebody else was selling and the seller was stronger than the buyer. Doesn't matter how many pounds they bought, the value of the pound hardly budged. What they didn't know was that the night before, George Soros had given a remarkable order to his chief portfolio manager, a person called Stan Druckenmiller. And what was this remarkable order? He said, sell sterling as much as you can and don't stop. I want you to focus on these sentences. What do you mean sell sterling as much as you can and don't stop? Do you have an unlimited supply of pounds? The answer is no. So what are you doing? How can you sell? You can sell what you don't have. This in stock market language also is called short selling. When you expect the prices of something to drop, you not only sell what you have, you sell what you don't have on the expectation that when the prices drop, I'll buy it back. Of course, the risk is you think the prices are going to drop. What if prices go up? Then you have to buy at a higher price and it can kill you. Now, George Soros was betting that the pound will collapse. And he's fighting a battle with the Bank of England. Now, obviously, who's going to be stronger? Who has deeper pockets? And if the Bank of England starts buying more, the price would have gone up and George Soros could have been destroyed. But George Soros and Druckenmiller were convinced that the British government cannot artificially keep up the pound prop for long. How long can they do that? In the process, they may finish the reserves. You know, this agreement was entered into by Margaret Thatcher in at the later stages of her tenure, that £1 will be equal to 2.95 Deutschmarks. Reluctantly, she had entered. She was not in favor of exchange rate mechanism, but before she remitted office, she had entered into that. Now, George Soros and Druckenmiller were convinced that it's just a matter of time before the pound comes to its, because England was going through turmoil. Economy was in bad shape, the labour market was in bad shape, and they were convinced that the pound is bound to fall. A little earlier, Finland and Italy had already dropped out of this mechanism under similar situations. The famous statement of George Soros to Druckenmiller that day was, go for the jugular. They were running a fund called the Quantum Fund. George Soros' fund was called Quantum Fund. The Quantum Fund sold pounds to anyone who was willing to buy. One of the things about currency market is it's open 24/7. So when the London markets were open, they were selling to the Bank of England, and when other markets were open, they were selling to other investors around the world. Now soon others also started dumping the pound. Now the Bank of England was desperate. Now if you want your currency to become strong, people should start investing in your country. So they will buy your currency. And one of the ways you can attract investors is if you hike up your interest rates. Guys, for example, if USA hikes up interest rates by 0.25 or a 0.5 percentage, you know, money will start flowing towards US and many markets in the world might fall because money starts fleeing their country. 0.25, 0.5%. Bank of England hiked up interest rate by 2 percentage points. And a little later, they hiked it by another 3%, unheard of. But they were desperate. They were hoping to reverse the sell-off and leave speculators with egg on their face, so to say. But Soros and other investors showed no hesitation. They continued selling. Look at the guts. Look at the courage. Next morning, drama started on September 16. Next evening, September 17, by 7:40 p.m., the Exchequer, the Chancellor of the Exchequer, in England, like in India, we have Reserve Bank of India Governor. In England, the fellow is called the Chancellor of the Exchequer, a gentleman called Norman Lamont. He got up before the British Treasury and he made a statement that massive speculative flows have continued to disrupt the functioning of the exchange rate mechanism. And he said, in the meantime, the government has decided that Britain's best interest will be served by suspending our membership with ERM with immediate effect. The moment he made this announcement, the pound plummeted. Guys, George Soros and Druckenmiller had broken the Bank of England. And in the process, in one day, they made a profit of $1 billion for themselves and became legends in the world of finance.